I was expressing my outrage at the behavior of this man. It's outrageous. It's outrageous.
We can't accept any kind of blackmailing. Putin has to decide to accept or not to accept.
The last thing I want to do is engage in a land war or a nuclear war with Russia.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition, everyone. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Ukraine holds talks with Russian negotiators in Turkey today. The minimum goal for Kyiv is an immediate improvement in the humanitarian situation. European stocks climb, yields spike. Russia transfers a $102 million foreign bond coupon payment to the National Depository. And stay with Bloomberg Surveillance Early Edition. This hour, we have an exclusive conversation with the outgoing UBS chairman, Axel Weber. You can send in your questions on IB Plus TV Go. We also have a very important interview with an energy minister that will be very telling on what OPEC Plus can and cannot do next. But first thing is first, so let's check in on the markets. European stocks, you can see, holding on to a lot of their gains, getting some 9.8%. Now, stocks are rising. Drop in oil is really fueling the hope, I guess, that there is some kind of ceasefire between Ukraine and Russia. The 210s, this is what we're watching out for a signal of the inverted yield curve, mentioning not only a slowdown, but a possible recession. When it comes to U.S. growth, yen, a lot of movement in yen versus the dollar, 123.52. Yen actually rising from around a 6-year low against the dollar. Again, this is divergence between the Fed and what we heard at the BOJ this week. And then Barclays, it's a bizarre story, and there's now $1 billion that needs to maybe be sold in terms of bonds because of an error that many say was basic. Barclays, that share price under pressure, down some 4.4%. Now, this is a picture for European stocks overall. Actually, I'm looking at the sectors, and they're all gaining. The DAX getting some 1.1%, the CAC 1.42%. And if you go back to the beginning of the war in Ukraine, a lot of investors are saying it's pretty shocking because globally, since then, since that low, stocks are now up some 8%. Now, differences are emerging among NATO allies over whether they should talk with Russian President Vladimir Putin. They also, of course, appear to be divided over what weapons to send to Ukraine. Now, for more, we go to our European correspondent, Maria Tadeo, in Berlin. So, Maria, first of all, you had an interview with the German finance minister yesterday. Tell us a little bit more about what NATO's trying to do with the war in Ukraine.
Yes, and well, we spoke with the German finance minister, and of course we talked about the defense story around this, and he was very clear, and to me this was striking, in which he said, where we are going to spend 100 billion euros to modernize the German army, because it has become clear as a result of the war in Ukraine that spending in your army, your military, your capabilities there is spending money for democracy and freedom. He used that word, spending in your army is spending money in freedom. The other big talking point that we debated, of course, is very connected to that, and is defense, energy, and security. And he did tell me at this point we're faced with a choice. Do we pay Vladimir Putin the rubles for gas he's asking for, or do we say no and kind of reject a blackmail? And this is what he had to say.
Jenny, 800 billion euros are on the table. And in I expect it's very hard to spend that money because of legal proceedings, the absorption capacity of the economies. So there are 800 billion euros. I'm open to new priorities, but we don't need new funding, new facilities, new measures. Let's use the facilities, the 800 billion euros we already have.
And that was Christian Lindner referring, of course, to the big stimulus package that was put together last year by the European Union. He says we're open to new priorities, perhaps not new money. He was very clear about this. He doesn't see a need for further stimulus. But again, you know, the key takeaway from this was a very frank but also very direct language, Francine, saying we're not going to accept any blackmail from Russia.
Yeah, Maria, the German finance minister, Christian Lindner, also said his country, as you say, won't pay in rubles for gas. I know you spoke about defense, you talked about the idea that this is a new Germany. What surprised you the most by this new German finance minister?
Well, to me, this was a very different type of language from anything that we've heard before from German governments. Remember, there was this idea, particularly in the Merkel years, that doing trade with countries, the politics of trade, the energy, defense, security, all of this was interconnected, and having big bilateral relationships with countries like China, but also Russia, would keep them engaged at the negotiating table and could avoid tensions. But yesterday, Mr. Lindner told me is that it is clear the game has changed. There has been a turning point now, and that Germany has to work with countries that shares its values. He also said at this stage for us, it's very clear that we need to cut our dependency from Russian gas. And I asked him flat out, but what happens if, as you say, you don't pay in rubles? Are you going to perhaps deal with no flows from gas? And he told me, well, we'll have to find another solution.
All right, thank you so much, Maria Tadeo, there in Berlin after that great conversation with the German finance minister. Now, the steepest global bond rout on record is still deepening, with the 2-year Treasury yield rising further and the 10-year edging towards 2.5%. We've also seen various inversions along the U.S. yield curve, which are signaling the risk of a recession. So to talk about all of this, we're joined by our Bloomberg Markets editor, Christina Kino, and Beata Manthi, head of European equity strategy at Citi. So thank you both for joining us. Christine, first of all, it's incredible that, again, and I ask you this every day, the stock market is resilient, it's fine. Even the tech companies are kind of on a tear at the moment, and yet this bond rout continues and deepens.
Absolutely, Francine. And I think this divergence is really what's puzzling investors at the moment. And I think the best explanation that I've seen so far is it's really a matter of timing and the impact through which the bond route is flowing through to the real economy and therefore to the corporate sector. And it's really a bit of a mismatch here because we're seeing the bond route playing out in real time, but the impact of those tighter financial conditions really won't come through probably in another 6 months or so. And so there's a bit of a mismatch here, partly why we're seeing the bonds kind of leading this decline, and in the absence of anything else that investors could potentially put their money to at the moment in bonds, then they're flocking over to stocks, and hence we're seeing the rally today.
Yeah, I think global stocks are up some 8% since that low at the day that actually Russia invaded Ukraine. Beata, as an equity specialist, do you look at the bond market? Do you try and analyze what they're seeing, or do you just follow your models?
Oh, of course, we follow what the bond market is doing, and for this year, since the start of the year, this was going to be the #1 theme driving the equity markets, in my view. And of course, the steep rise in bond yields is a natural response to how much more hawkish the central banks and especially the Fed have become. But what I would take, in addition to what just has been said, that what else are you going to buy, right? You're buying equities as inflation is so high and rates are still relatively low to where the inflation is. To me, the key for support for equity markets is the level of real yields. So real yield remained negative despite the nominal bond yields moving so much higher, right? So they are at negative 50 basis points. They were at the same level back in February when the nominals were at around 1.7. They are at 2.5.
So, Beata, are you still constructive on equities? Are you more choosy, or are you expecting a correction?
So we are just coming out of a big correction, right? In terms of my targets, I have 7% upside by the end of the year for Stock 600, and we were always willing to, our models were telling us to buy into this dip that we've just had.
Mm-hmm. All right, so that's some of the models, and we'll look at the various sectors. What do we do with tech, Christine? So tech, kind of on the tear if you look at Tesla and Apple. What are they seeing?
Well, Francine, you know, I think before we got hit with the repercussions of the war in Ukraine, of course, the idea for tech in 2022 was really one of differentiation, right? Gone were the days when tech was being viewed as a homogenous sector and indiscriminate buying among investors. I think in 2022, investors are really starting to kind of parse through the various sectors or subsectors within this broad sector and taking a look at companies that have longevity to them. We're talking about the Teslas geared toward the longer term energy transition process. We're talking about your Amazons, which really built this kind of very resilient web services and e-commerce sort of business, and then differentiating that from the likes of Facebook or Meta, shall we say, where, you know, we really saw it during the earnings season getting battered by changing trends in the short form video space. And I think, you know, now that kind of the dust is settling a little bit, or attention is being diverted a little bit away from the front lines with war in Ukraine and investors trying to factor in all these other catalysts for markets. You know, this theme of differentiation is coming back to fore, I think.
Yeah, we'll talk a lot more about differentiation. Thank you so much, our Christina Kino, our markets editor, Beata Manthi, head of European equity strategy at Citi, stays with us, and we'll talk about this divergence and maybe some of the sectors she likes. Smart Conversations continue on Bloomberg Surveillance Early Edition this hour. We speak exclusively to the outgoing UBS chairman, Axel Weber. Send in your questions on IB Plus TV Go. This is Bloomberg.
We need more growth. So we are focusing on fostering private sector growth, reducing the burden for small and mid-sized companies, faster legal proceedings for investments. And on the other hand, we try to consolidate the public finances to fight against rising inflation risks. So the double approach, on the one hand growth, and on the other hand sound public finances.
Well, that was the German finance minister, Christian Lindner, speaking to our Maria today. Now let's get back to Beata Manthi from Citi, looking at the markets. Beata, we talked a little bit about some of the pitfalls. We talked about inflation, of course, some of the corrections that we could see in stock market if you look at the bond market. Amongst the European cyclicals or European stocks in general, what do you like the most?
So in terms of my sector strategy in Europe, I still have a mild cyclical tilt, but it's very selective cyclical tilt. So what I worry about is that the higher rates, lower growth, and higher inflation will put pressure on earnings from most of the cyclical sectors. So those that I still have as an overweight is partially commodity sector. So I like basic resources. So in the high inflation environment, cyclicals tend to do badly outside of the commodity sectors, and my preferred commodity sector is basic resources. I also like chemicals. I continue to be overweight banks because I think better news along the way should help them starting to outperform again. And also I think a lot of bad news is already in the price. In terms of defensiveness, my preferred defensive sector is healthcare, because I think it's going to be the most immune to the inflationary input cost inflation. And then I have also tilted up the growth exposure. So I think the big takeaway after the conflict is going to be the fact that, yes, we are going to be a more hawkish central banks. However, the inflation is going to be much higher, and as the net result, real yields will stay lower. So that should help tech sector or luxury goods in Europe.
So, Beata, when you look at the tech sector, can they really compete with some of the U.S. counterparts? And if you look at tech, I mean, it's very wide. Is there a subsector of tech that you prefer?
So, my constructive call on European tech is basically based on the dislocation between the level of yields and the valuations it's trading now. It has derated a lot. It's trading at 21 times PE right now, forward PE. My models are telling me it should be trading closer to 26 times, given where the real yields are right now. And in terms of the relationship to the US stocks, the gap is huge. So it is a catch-up trade. I think the European tech has more to catch up than the US one.
Beata, what do you least like? Is there anything that you would sell off right now, given the uncertainty with inflation and the chatter on the markets that if there's a policy mistake, then we would see a hike from central banks and then a quick reversal of that?
Absolutely. So in terms of the policy mistake, and coming back to what we've spoken before, the higher bond yields, now I'll be much more worried if the bond yields start coming down, indicating that it is indeed the policy mistake, than when they are coming up as they are right now. So I still have this mildly cyclical tilt, if we have a policy mistake, mildly cyclical tilt is not going to be the right way forward, right? You really need to tilt up the defensiveness of your strategy. In terms of my underweight, I am worried about cyclical sectors that are very sensitive to inflation and supply shocks. So that's autos or travel and leisure. And out of defensive sectors, I don't think they are all going to be immune. So those that are also inflation sensitive, like personal care or consumer staples overall, I have as an underweight as well. So it's not as simple as being cyclical versus defensive.
Not, of course, yeah. Yeah, because you have to look at individual stocks and some of the individual dynamics. Beata, when you look at what we've lived through in the last 3 years, I mean, it's a trade war, then it's been COVID, just certain parts of China, of course, is still locked down, and now it's the war in Ukraine. What does this do to earnings? Should we worry about margins or inventories?
We should be worried about both, right? What worries me, Francine, is that for European EPS growth, the analyst consensus is still quite too high in my view. So analysts are forecasting 9% EPS growth for this year. Our city economies have almost halved their GDP growth for this year for the Eurozone. And I think it's just a matter of time for EPS to follow through. So my top-down models are telling me that the EPS growth for Europe should be closer to 3%, not 9%, where the analysts are right now. So downgrades to come.
Beata, thank you so much. Beata Manthi, their head of European equity strategy at Citi, talking about some of her boldest and brightest calls. Now, we're also getting some breaking news out of the Metropolitan Police. The UK police set to issue at least 20 fines over the lockdown number 10 parties. Now, we're just getting some lines out of the Met Police saying that they will update on the probe of the COVID-19 regulation breaches, and they will have to put further referrals may be made in time. Now, this was something that was leaked yesterday, the fact that they're set to issue at least 20 fines to government officials close to the Prime Minister who broke UK lockdown rules. Now, this is according to a person familiar with their thinking. So as soon as we have that confirmed or not, we'll bring you the very latest. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour, we speak exclusively to the outgoing UBS chairman. He's Axel Weber. Send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Amazon has erased its 2022 losses after rallying on Monday. That's as improving earnings outlook outweighs worries about a rising interest rate environment and geopolitical tensions. Now, it's not just Amazon. Some other big tech stocks have also staged a comeback over the past 2 weeks. Now, for more, we're joined by Bloomberg Quick Takes, Alex Webb, who's also a specialist in all things Amazon and tech-related. Alex, first of all, it's quite surprising. I mean, we have a pretty big war. There's interest rates rising. We're not sure whether we're looking at recession, and tech's flying off the shelf.
Yeah, there seems to be a sort of cycle out of sort of longer duration stocks, things that seem like they're not going to be delivering good earnings growth for some time because of the economic environment. And they're going, well, actually, the big tech stocks, they're still pretty resilient, and they churn out a huge amount of cash. Tesla obviously slightly different, but certainly in Amazon's case and some of the others, they can be cash generative when they want to be.
And so what are we looking at next? If you look at Tesla, for example, the stock price has done very well. What's behind that?
The thing that's really interesting with Tesla is they've announced they're planning to do a 20-for-1 stock split. The shares jumped about 8% yesterday. It's equivalent to $84 billion in market cap. That's more than Ford. It sort of shows to me, though, that people aren't necessarily investing in Tesla for the fundamentals. It's really more of a momentum trade. If there's going to be a 20-for-1 stock split, there's therefore an anticipation that it'll make it more accessible to retail investors. That, that's the expectation. It's not really to do with anything to do with Tesla's earnings. Yeah,
because I would assume that actually any kind of talk, any tech or auto would be impacted also by a shortage of raw materials.
Yeah, well, I mean, Tesla, there is still the expectation there is more demand than they can supply at the moment. They have a long waiting list of customers. They are bringing on more production, of course, in China and Germany. So although I say that it's not necessarily a bet in the fundamentals, there are some reasons for optimism. But the thing that's driving it right now, this big jump, is more to do with that stock split than that increasing supply.
What's going on with Meta?
God, I mean, Meta is just like very difficult one to play at the moment because they're betting the house on augmented reality. And we don't know whether that market's going to be actually reasonable. It's also a space where every single other company is playing. We've got Apple, Google, Amazon, Meta, and Microsoft, as well as Samsung and Sony and all these others piling into the space. The big question is, can they carve out a core expertise? In the way that's happened with the web, Facebook is an advertising company. Now, will they have a strand of the metaverse which they can own and dominate? That's a really big question that we don't know the answer to, and they haven't given any clarity on either.
Alex, thank you so much. Alex Webb there from Bloomberg. Quick take. Now, we'll have plenty more, of course, on everything to do with technology and stocks. Smart Conversations continue right here on Bloomberg Surveillance Early Edition. Up next, we speak exclusively to the outgoing UBS chairman. He's Axel Weber. You can send in your questions on IB plus TV Go. Stocks rising today. We're seeing oil drop. Upcoming ceasefire talks between Russia and Ukraine seem to be helping sentiment. This is Bloomberg. Ukraine holds talks with Russian negotiators in Turkey today. Now, the minimum goal for Kyiv is an immediate improvement in the humanitarian situation. European stocks climb, yields spike. Russia transfers a $102 million foreign bond coupon payment to the National Depository. And stay with Bloomberg Early Edition. Well, up next, we speak exclusively to the outgoing UBS chairman. He's Axel Weber, and you can send in your questions on IB plus TV Go. Well, good morning and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, there is quite a lot going on in the market. If you look at stocks and bonds, they tell you two different things. So let's get straight to it. Stocks are climbing. Oil is falling ahead of this ceasefire talks, which the talks between Russia and Ukraine seem to be helping sentiment. There's certainly hope that they will lead to some kind of ceasefire. Government bond yields rising with bets on an aggressive U.S. monetary tightening, hurting short maturities in treasuries. Now, inversions along the curve where some short-term rates exceed longer tenor yields also point to concerns about a looming economic downturn as the Federal Reserve hikes interest rates to quell high inflation. Now, we also talk, of course, about everything that's going on with currencies and yen 123.57 against the dollar. Differences are also emerging among NATO allies over whether they should talk with Russian President Vladimir Putin. They also appear to be divided over what weapons to send to Ukraine. Well, the role, of course, of Switzerland as a place for Russia's wealthy to stash their money has come under scrutiny from Ukrainian President Volodymyr Zelensky. UBS has, for example, an exposure of around $200 million to Russian assets through loans to clients and a small number of sanctioned wealth management clients. Well, we're delighted to be joined to talk about Russia, to talk about inflation, but also his career, 10 years as chairman of UBS, by Axel Weber. Axel, after a decade of leading the Swiss bank, you're stepping down in April. Of course, you're an expert in monetary economics. You served as president of the Deutsche Bundesbank during the 2008 financial crisis and held roles at the ECB, the BIS, and the IMF. So first of all, congratulations on your career so far. Axel, what will you miss the most? I mean, you've been in the thick of it for the last 10 years at UBS, and you're also stepping down at a very delicate time for UBS and for Swiss banking, given the war in Ukraine.
Well, I think, in general, UBS is in a much better place now than we've been 10 years ago. And handing on to a very experienced successor with Colm Gallagher is something that I think is a normal order of business. We've made it really the landmark of UBS to have orderly transitions of the CEO about a year and a half ago. I jointly worked a long time with with Sergio Motti and now with Ralph Hammers, and I'm passing on the baton to Con. So orderly and well-organized transitions are a hallmark of a stable institutions, and we've been able to do that here at UBS. I think there is 10 years at the helm of an institution as chairman is enough. I'm looking forward to doing different things in the future, and I've really enjoyed every day being at UBS just as much as I enjoyed being at the Bundesbank. I think my career has been made up of several stages, so I'm very happy to move to the next stage.
Yeah, I mean, in a previous life, of course, you also dealt very clearly with the 2008 crisis. Now we talk about, for example, Russian collateral and the impact this could have on some of the Swiss banks. Have there been any margin calls on Russian clients?
Well, for us, we've been reducing our exposure to Russia, both on the collateral side and on the client side, tremendously already since January, because tensions were looming. We've seen the precedent with Crimea and the invasion there, and we feared that Russia might become an area where we better be cautious. And if you look at our own, on-site in Russia, we have only 70 employees there. We don't do any new business in Russia at all. All we're doing is winding down trades, seeing that the payments get processed. We get exemptions and licenses for doing that because we apply all sanctions globally as a Swiss bank in every constituency in which we operate, be it US sanctions, be it European or UK sanctions. The challenge has been from the start that those sanctions weren't perfectly aligned. So at the level of the IF, we created a task force to align them. But we apply all the sanctions that are processed, and we've been reducing our exposures quite a bit over the last 3-4 weeks. So UBS is in quite a good place as far as that's concerned.
So, Axel, can you give us a sense of how much Russian money UBS has? And in general, there's a lot of concern about the Swiss banking system as a whole, some of your competitors, and how much Russian money there is in that economy.
Well, we don't disclose, money by national citizenship. What we disclose is by regions. We have a regional setup. And as I said, Russia as a region in the bigger picture with 70 employees doesn't really move the needle. There are exemptions in these sanctions for Russian citizens that live in the European Union and that live also in Switzerland, and most of those will be recorded as money under management here in Switzerland or in the European Union. So I think it is, these are not sanctions clients. These are clients that continue to have a reporting obligation to the authorities, in particular if there's more than 100,000 assets under management per individual client. But that is an area where we do not discriminate between citizens of the European Union and Russian citizens that live in the European Union, for example.
So where does the Russia crisis actually mean for the future of Russia desks, for example? Are you going to be taking any action beyond looking at individuals being sanctioned?
Well, look, I personally, and this is for my successors to decide, do not see any future of business onshore in Russia for many of the international banks, because even if we come to a ceasefire, Russia has put itself outside the international community, and this will have a pretty long-dated consequence. But having said that, if you're winding down a financial institution that is a licensed financial bank with regulatory obligations, that is a long winding process, and we're fully aware of the long-term consequences and the process that is needed to basically give back a license in an area where you operate. So that's a longer-term decision for many of the banks to be taken. At the short term, what is important is that you use your presence in the region and connectivity to some of the clients with special exemptions to reduce exposures of clients and wind down your own exposures. That's what's happening now. Some of the contracts are really long-dated derivative contracts, which are sanctioned on SWIFT, and they need to be wound down in bilateral agreements, replacing the contractual agreement, and they need to be okayed by the regulators. That's the process we're in.
And Axel, have you been more or less surprised about the resilience of the financial system, given we're freezing out the 11th biggest economy in the world, and yet we haven't seen either a default or a margin call?
I haven't been surprised because, look, Francine, Russia is less than 10% of the emerging markets MSCI index, and that emerging market index is less than 10% of the overall MSCI. So, you're talking about a 1% exposure, way smaller than the weight of China and other countries, and freezing that out in an orderly process rather than a disorderly process, which is what it's all about in basically running down positions, is not something that I would have been concerned about. I would have been more concerned if we embarked on a sort of sudden stop and settled all remaining open positions in an unorganized way. But the regulators have decided that that's not a wise thing to do. I agree with that. And so what we're doing is an orderly wind down, taking Russia out of our financial systems in counterparties, be it trade companies, be it oil producers, be it private clients. And that's the right way to go. And doing that in an orderly fashion is what produced the stability.
Axel, through the years, I've always asked you about M&A in the banking sector in Europe. Of course, we've just gone through a tough couple of years. We had the Trump trade war with China. We have COVID. We've had this global talent war because of COVID, also when it comes to bankers being needed to pay more. And you've had a number of things going on in the bank in the last 10 years. What was the most difficult thing you've had to deal with?
No, I think when I came in, I was brought in with Sergio Amati to facilitate a turnaround and to reestablish the bank as a strong bank in Europe. When I joined UBS, it wasn't the icon it used to be. We've reestablished the bank as the most preeminent European bank. If you look at where we trade above book value, if you look at our ability to return, 7 billion, profit last year, 7.6 billion, returning 5 billion of capital to shareholders this year, that's what we wanted to get to. I'm very happy we got there. It wasn't self-evident, and it took a lot of hard work. So I'm proud that this 10-year story, continuous work, hard work in doing that paid off, and I'm leaving in a much better place, UBS, than I found it.
I mean, do you ever have questions about, paying your bankers as much as a lot of the Wall Street firms to make sure that you attract the right talent? How real is a war on talent right now?
Absolutely. Look, the pace, whether you like it or not, on pay is set on Wall Street. Europe cannot match that number, but Europe has to be flexible enough, European banks in America, to really not fall behind in terms of talent and retention. And that's the balancing act you need to do. I think we got that balancing act largely right, but we will never pay like an American bank. But being the most preeminent bank in Europe, we can pay well among the top European banks. And for client attention and for getting, also people into the bank, that has helped us. But there is a gap to the US, very clear. You have to accept that, again, what is acceptable pay in Europe. And Switzerland has one of the toughest pay rules. So we've been managing this balancing act pretty well. I always say, Francine, if there's not a high noise level in Europe about what we paid, we probably paid appropriately for Europe, but we underpaid for Wall Street.
Yeah, so do you think that you should pay more, that a company like UBS should be able to match Wall Street?
Well, look, last year was the best year in 15 years. It wasn't the best pay year in 15 years. Why was that the case? I said in your show that it was because of Archegos. We had a major failure in risk control, not just at UBS, but also at other banks. I found that something that I found a very negative development. I thought we were better, and I really let management and everyone know that this will have consequences for this pay round, and it did. And I owe that to shareholders, that if there is a major slip up in risk management, that this is not something that shareholders have to take responsibility for. Shareholders are in it with the employees in the bank, and we did that, and there was no pushback. It was very clear this was a one-time event in a very good year. It still was a very good year, but since it was a risk management failure, it had to have consequences, including separating from people. That's my philosophy, and I think that's what I consistently applied throughout these 10 years.
Axel, there's been so much speculation, sometimes, of course, with the UBS and Credit Suisse blessing, sometimes not, or speculation around a possible merger between these two big Swiss banks. Do you think it will happen in our lifetime?
Well, I hope to live many years, so you can never exclude anything. But I do think that the regulators in general have set a very high bar for the merger of global systemic banks, which both us and Credit Suisse are. On the home front, there is a very strong correlation if the two were to merge with a country risk that is far larger than everything else. So I can only see that as an emergency discussion, but I don't see that now, and I don't see it for the next time to come. So this is a principled discussion. How good would two banks putting their own books together be as a joint entity? Because Europe lacks scale. Some of these would give you Europe scale, but I don't think that these scales are, from a policy side, seen as very desirable, even now, 10 years after the crisis. So I think this is sort of strategic planning when you do desktop analysis. This is not something for real life.
All right, Axel, thanks so much. Axel Weber, the outgoing UBS chairman, stays with us because, Axel, I have 1,000,001 questions about inflation, possible policy mistake, and also the divergence between the ECB and the Fed. Coming up, we continue our conversation with the outgoing UBS chairman, Axel Weber. We discuss global inflation and current moves in markets. Send in your questions on IB plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Well, still with us, outgoing chairman of UBS, Axel Weber. Now, after a decade of leading the Swiss bank, Weber stepping down from April. Now, an expert in monetary economics, Axel Weber also served as president of the Deutsche Bundesbank during the 2008 financial crisis and had roles at the ECB, the BIS, and the IMF. Axel, thank you so much for staying with us. If you look at the inflation forecast and sometimes also what parts of the yield curve tell us in terms of the inversion, how does this inflationary bout end? Are you looking at a possible recession or even stagflation?
No, so I think the first thing that is clear is central banks are way behind the curve. I've been talking about inflation being uncomfortable high for more than a year. The central banks are only starting to move now, with the US as the first mover. The ECB, we expect to, wind down their asset purchase program in September, do the first move in December, and then 3 more next year. So a outlook for monetary policy that is way behind inflation developments. I think they really missed it this time around. They felt inflation was dead for good. Now it's back, and they haven't really changed their policies, or they're about to change it. The challenge that is there is if the Fed really, which is some rumor in the market, moves to a 50 basis point move as a next move, it looks kind of panicky. And so I would be very strongly cautioning around moves like that, because what it will produce is a very elevated short end of the yield curve, which will go up by, if there are 7 moves this year and potential 2 or 3 next year, the short end will really snap up. And the long end will not be taken along, because some of the inflation we're seeing is transitory. So there is a big risk that an overly expeditious normalization now, which kind of acknowledges that they were behind the curve, really produces an inverse yield curve, which is not a great thing to have. It's not necessarily a prediction of a recession, because I think those predictions are really weakened. But it is definitely an uncomfortable situation on the bond markets.
So, Axel, do you worry that if there is aggressive hiking, so front-loading the 50 basis points that you're talking about, then they would have to reverse it quite quickly? And how much would that be a disaster?
I think being behind the curve and then doing more faster to get ahead of the curve is producing 2 mistakes in a row. It's a first mistake to not have started rate hikes earlier, and I've been very outspoken about that. It would be a big mistake to now try and leapfrog inflation. Some of it is transitory, so I think it could be seen as an overreaction. Jay Powell has already indicated it will take around 3 years where the Fed will see inflation developments that are uncomfortably high. I wouldn't be surprised over the next 2 to 3 months to see a double-digit inflation rate. And so I think panicking or reacting too strongly in the light of a short-term push-up in inflation, which is less transitory than they thought, would be a second mistake, and it has financial stability implications. We've seen that last time the Fed was hiking rates strongly, it basically, in an economy where there is strong leverage, produces some problems in the financial stability sphere. And we've seen that before the financial crisis, and I'd hate to see that, in different parts of the market realize. It's not the banks this time around, or necessarily the mortgage market, but other parts.
out of all the central banks, is the ECB the one that's really behind the curve?
Well, the ECB is also behind the curve, and I think they're taking it much slower in reacting. For example, I told you that our first expectation is December. I mean, I don't really see what between now and December, why does it take 9 months to acknowledge that there is an inflation problem that is more persistent than they anticipated, and to say, kudos, we've misjudged the situation, we have to act now. Instead, they're sort of taking triple steps towards a rate hiking cycle. I think the sentiment of the committee is probably more towards tightening than what the ECB directorate has been publishing so far. So I really don't see why it needs to wait till December. I think they should get on the move. And a stitch in time saves 9. This is an old saying, but it's a proverb that actually holds for monetary policy. Earlier action can avoid dramatic action later. I think they have to acknowledge the problem and get going.
I mean, what does, I guess, this inflation mean for traders? If you look at some of the trading arms at the investment bank, I know it's pretty niche, but there's quite a lot of money to be made. What does that mean for UBS?
Well, look, for example, many of the American banks have said if the yield curve rises in an orderly fashion with a normalization of monetary policy, and we have an upward sloping yield curve, that will produce a much stronger net interest income in the retail business of many of the banks, which is still the core of many banks, not us. I mean, we're a wealth manager. But that will not happen if that yield curve gets inverted, because it's seen to be an overly ambitious tightening with the risk of inflation coming down fast and with the economy taking a hit. So I think an orderly yield curve uplift is what the market is looking for. An inversion of the yield curve will have challenges and maybe overstimulative, at the short end of the bond market, but not really reflect itself across the yield spectrum. And I think that that's not a good development. So central banks should be measured. They should be moving with foresight. And here they're moving late, so they should be measured still, even if they're moving late.
Axel, so this is possibly one of your last Bloomberg TV interviews as chairman of UBS, since you're stepping down in about 5 days. What's next for Axel Weber? Would you go into politics or stick to bank and investments?
No, I think, I've been in a listed company for a while. I will look much more into private markets and, an engagement that is a bit more off the limelight, where you're not commented on a day-to-day basis by everyone that's an observer. That's the transparency a listed company needs, and I've always welcomed that. I'll be doing something that is more private, once a month or once a year in the headlines. That's absolutely sufficient for me in the future.
So, Axel, was it exhausting being under such scrutiny?
No, I'm a pretty robust person, as you can see, and it's all about processes and work. I organize my work life in a very continuous and steady way, and I've just been working off agendas and, that over a 10-year period. That's a point where you then can pause and, go back, and I'll really will do that. I'll take some break now and recharge, but it's clearly for me too early to not do anything. But I'll keep you posted. Definitely will.
Okay. Axel, we have many questions coming in, but one that really caught my attention is actually, given the historic move from Switzerland away from the neutrality stand, because they're taking, of course, an opinion on what's happening in Ukraine, how does that affect longer-term Swiss banking?
I don't think it does. The same discussion we had was when Switzerland moved onto the automatic exchange of information and basically abolished all of the tax transparency that characterized the financial center in the past. That was a smart move, because now Switzerland is much more dynamic as a financial center than it's ever been, because we attract money because we manage it well. Completely above the radar screen. And I think the same is true here. The largest part of the Swiss population was in favor of this move. And the government did what the largest part of the population thought was the right move. This was nothing to do with being in NATO or in any bloc agreements. This was about sending a very clear signal to the first war on European territory where Russia invaded Ukraine. It was a clear signal. It was intended as that. And I think it was the right signal to send.
Axel, thank you so much, as always, for your time. I hope to see you very soon again on Bloomberg TV. Axel Weber, the outgoing chairman of UBS. Now, we'll have plenty more, of course, on Ukraine. We'll have plenty more on the banking sector. Coming up, we also check in on the recent market moves with a specific, of course, attention to the Treasury market. This is Bloomberg.
I was expressing my outrage at the behavior of this man. It's outrageous. It's outrageous.
We can't accept any kind of blackmailing. Putin has to decide to accept or not to accept.
The last thing I want to do is engage in a land war or a nuclear war with Russia.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. On this Tuesday, March 29th, our top stories today. Ukraine-Russia talks resume today in Turkey. Ukraine's hoping for a ceasefire agreement. At the same time, NATO allies appear split over whether they should talk to Russia's Vladimir Putin. Putting the squeeze on billionaires and private equity firms. That's what President Biden's new tax plan does. It's calling for $2.5 trillion in new taxes. And will investor confidence be shaken by that bond sell-off and inverting yield curves? Stocks continue to gain. Oil is fluctuating today after the biggest loss in almost 3 weeks. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards with Danny Berger in London, Kailey Leinz with us in New York. Matt Miller is off today. And Danny, a real focus once again on the yield curve. Today we focus on the 2s, 10s, not inverted yet, but certainly a big topic of conversation.
And look, it is a global bond market, so yields pushing higher in the U.S. is having global ramifications. And you see that really clearly in Japan with the government's efforts to keep the benchmark yield in bound. Now, it's a much more calm day, or it was rather, in the Asian session. You did have declines in the dollar versus the yen, so a little bit of a stronger yen, because recently it's the weakness in the Japanese currency that has really caught the attention of market participants. Yesterday falling to its weakest since 2015. Now, we did have some jawboning from lawmakers today saying that it will be concerning if we continue to see weaker yen, so perhaps some of that allowing us to hang tight this morning. You also have, again, finally traders responding to a BOJ, which has started this unlimited program to buy bonds for 3 days. You're looking at a little change JGB yield. And then elsewhere in Asia, you did see Asia stocks snap 3 days of losses. That being led by tech, really following on from that U.S. rally in tech yesterday. Kailey, of course, you've got the look on the U.S. assets.
Yeah, and U.S. assets are moving higher, at least when it comes to futures at this point in the session, Danny. We are right around session highs, though it's not a monster move. Right now, S&P 500 futures up about 0.3%. As both you and Anna alluded to, the action really has been centered in the bond market. We have yields moving up today. The 10-year is right around that 250 level, but there is more action in the front end of the curve. That 2-year yield is moving even higher, and as a result, what we're left with is a increasingly flat yield curve. Right now, the gap between 2- and 10-year Treasury yields is just 8 basis points. Of course, we've seen a lot of other parts of the curve invert. The question is this inversion coming, and what could that signal about a potential U.S. recession? In other asset classes, well, of course, we saw that big drop in oil yesterday. WTI crude was down about 7%, but we're getting some stabilization this morning, up about a percentage point. We're sitting just shy of $107 a barrel. And of course, we've been keeping an eye on what has been a consistent stealth rally in Bitcoin. It got close to the $48,000 level yesterday, Anna. Just a little bit softer this morning, trading around $47,600, Anna.
And I know crypto very much on your mind, Kailey, it being Tuesday, that show coming up later. Let's focus on the European story then. The map flashes predominantly green, predominantly investor sentiment being kept positive, if you like, despite the fact we see all of that movement in fixed income markets. The CAC 40 really to the fore, flashing pretty green on this map, up by 1.7% today. Some of those luxury names that have been much beaten up because of war in Europe, and those are making a bit of a rebound, a move to the upside today. Autos also moving to the upside, more on that in a moment. Brent crude 114. So just as Kailey was saying, a bit of volatility in the oil price there. Yes, we saw a pullback yesterday in oil prices, but today things were negative to start with here in the European session, but now up by 1.8% on the oil price. VW confirming they are planning a Porsche IPO for the fourth quarter. Interesting to get that confirmation in the light of recent market volatility and everything that's going on. Barclays in focus for another day. Yesterday down 4% in London, down 10% in New York, down another 4% today here in London. London, then catching up with that late move in New York. We have a big block trade going through, a seller selling a big chunk of Barclays shares. Not clear who that is at this point, but this coming a day after the company had to confirm that they issued more structured notes than they had been had the regulations to do, and as a result they were going to have to take a hit of just over $500 million US. So that's a real focus for the banking sector here in London. Quick check on the Russian assets for you. We're up by another 4% on the Russian index. This is the stock index, actually fairly unmoved since we reopened Russian trading. And yes, they're extending the hours, but there's still no short trading, still very abnormal in terms of the Russian equity market story. And here's the Russian ruble on the rise once again. This is the 7th day, I think, moving to the upside. And interesting to note the Russian 10-year bond yield here. We have heard from the Russians today that they say they paid a coupon on one of their 2035 euro bonds. So that keeps Russian assets in focus for us. Kailey.
Yeah, making that $102 million coupon payment, continuing to fulfill some of these debt obligations, even in light of sanctions. Now, as for what else is ahead today, we're going to get some economic data here in the U.S. Consumer confidence figures will cross at 10 a.m. New York time. Then Fed speak will continue again. John Williams, Patrick Harker, and Raphael Bostic all speaking. Will they continue to beat the drum toward 50 basis points in May and perhaps beyond? And finally, on the geopolitical front, President Biden will be meeting with the Prime Minister of Singapore at the White House. Danny.
Well, Kailey, we also continue to monitor the war in Ukraine, and Ukraine is striving for a ceasefire agreement in talks with Russian negotiators starting today. Meanwhile, NATO allies are split over whether to talk to Vladimir Putin. Let's get more with Maria Tadeo, our European correspondent in Berlin. Maria, when it comes to the split in NATO, how are these divergences forming?
Well, Danny, in fact, I would say this is a long-running story now. We know that there is a debate between countries that believe this is not about defensive equipment, that Ukraine should have offensive equipment, that would allow the country to push back the Russian troops from its territory. And remember, it's Russia that has invaded Ukraine, not the opposite way around. So some do believe that this is not just about defending the country, but also reinstating control from the Ukrainian government and the Ukrainian army. The other big question, of course, is what to do with Vladimir Putin. We have seen very different tone from the President of the United States. I'm sure you remember this. It was 9 words, for God's sake, this man cannot stay in power. And then the likes of Emmanuel Macron making it clear that in his mind, this is not constructive, that you need to have this diplomatic channel that's open and constant, even though the situation on the ground, we have seen those pictures, is dramatic. Many will tell you there is a case to argue that a lot of this is war crimes, but nonetheless, you still have to be on the phone with Vladimir Putin. And going back to Emmanuel Macron, he said it would be unrealistic to call him butcher in public and then hope to have a constructive discussion with him diplomatically behind the scenes on constructive terms.
Yes, although we've heard from the mayor of Mariupol. He says, of course, that 5,000 people have died in the Mariupol siege. That is just one part of this dreadful conflict. These figures, though, are impossible to confirm at this point, as we know, Maria. Maria, you've been focused on this. You've been focused on that conversation with the German finance minister, I know. We played some of a short clip of that at the start of this hour. A real resistance to pay for any of Russia's energy products using the Russian currency. What were your takeaways?
Yes, and Anna, this was a conversation that I had yesterday with the German finance minister, Christian Lindner, in Berlin. We talked about defense, we talked about energy. To me, it was very surprising to see how direct he was. When I asked him, are you going to pay in rubles? He told me, no way, we're not going to do that. It's blackmail. And I also asked him, what happens if Vladimir Putin then decides to cut the flows? He told me, well, we're going to have to find another solution. Let's take a look.
We can't accept any kind of blackmailing. The treaties are based on dollar and euro, and so we will fulfill the treaties and we will pay in euro and dollar. We suggest the private sector companies to stick to these currencies. Putin has to decide to accept or not to accept. In any case, we are prepared and we will find solutions. It's our long-term objective to be less dependent on Russian imports.
And that was Christian Lindner, the German finance minister, in that conversation that we had together here in Berlin. Now, he talks about a solution if Vladimir Putin decides to cut the flows. It is unclear what it means, but then to me, it also caught my eye when he said, this is government guidance. We're not going to pay in anything that's not euros or dollars, and I suggest that private companies operating in Russia do the same. So it's a thinly veiled warning, but nonetheless a warning from the German finance minister.
All right, Bloomberg's Maria Tadeo, our European correspondent in Berlin, thank you so much. Now, as we said, those talks between Ukraine and Russia are continuing in Turkey. We are getting some headlines out of that. The negotiator on the Ukrainian side, Podolyak, is speaking in Istanbul at the moment, and he says they are discussing ceasefire in Russia talks. Then some news on Russia's end out of the TASS news agency. Russia saying that a statement on Ukraine talks will be coming in a few hours, and that Russia and Ukraine are continuing consultations. So we will continue to keep an eye on those headlines. Meanwhile, President Biden, and Maria mentioned this, is trying to clarify his comments calling for the removal of Vladimir Putin. He spoke yesterday.
The last thing I want to do is engage in a land war or a nuclear war with Russia. That's not part of it. I was expressing my outrage at the behavior of this man. It's outrageous. It's outrageous. And it's more an aspiration than anything. He shouldn't be in power. There's no, I mean, people like this shouldn't be ruling countries, but they do. The fact they do, but doesn't mean I can't express my outrage.
So Biden clarifying no change on the foreign policy front. Meanwhile, on the domestic policy front, President Biden has renewed his effort to persuade Congress to squeeze more tax revenue from the largest corporations and wealthiest households. His new budget calls for $2.5 trillion in tax hikes. Bloomberg Washington correspondent Joe Matthew joins us now from D.C. So, Joe, we know the president wants it. Is he likely to get it from Congress?
Not the current form it's in, at least, Kailey. This is the process that we go through every year. And one of the most overused phrases in Washington yesterday was a statement of values. And that is what this is. It's the wish list from the White House. It will likely not bear any resemblance to this if, by the way, Congress gets a budget done, remembering that we just got one passed about 2 weeks ago, halfway through this fiscal year. The White House is trying to invoke fiscal responsibility, though. At least that's the pitch here. It was the top line of the release, suggesting that it would reduce deficit spending by $1 trillion over the next 10 years. But, Kailey, to your point, that's going to involve tax hikes, and some of them will sound familiar, including a proposed 20% minimum tax on income and unrealized gains for households that are worth $100 million or more. This idea of a billionaire's tax has gone nowhere so far on Capitol Hill. It was part of the Build Back Better legislation that never passed Congress last year, and it looks like the White House is going to come around again on this, even though it appears there's not enough support for that to ever become reality.
If there's not enough support here, we also have a Senate bill to regulate tech platforms that the DOJ has thrown its support behind. Does that make this bill more likely?
It does breathe a bit of life into this. Look, we've seen a number of different proposals from Congress on reining in big tech since President Biden took office. This is the first one the administration has essentially endorsed. The Department of Justice sent a letter to the Senate Judiciary Committee saying that it supports this legislation that would keep big tech from favoring its own products on its own platforms, would try to level the playing field when it comes to competition here. The White House does like the way this sounds. There's a companion bill on the House, but this is still on the committee level. So technically really in the infant stages. It's something that we could be talking more about this spring and summer.
Joe, thanks very much. Bloomberg's Joe Matthew there in Washington. You can listen to Joe every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Now, inversions along the yield curve are causing some investors concern about a looming economic downturn. That's as the Fed moves more aggressively to quell high inflation. Tatiana Daria of Bloomberg Markets Live joins us now. Tatiana, very good to have you with us. So I'm just looking now at where we are on this. We have the 2s, 10s very much in focus, so that the gap between the 2-year yield and the 10-year yield not inverted. They were 7 basis points apart earlier on, now appear to be 9, so maybe not as imminent as maybe it had seemed in earlier European trade, but this is a focus for markets.
Yes, exactly. And as you mentioned, well, yesterday we were all focused on the 5-year to 30-year gap, which has inverted, and now everyone's zooming in on the 2-10s, and for a good reason. This specific part of the curve has had an excellent track record in forecasting recessions. In fact, it has forecasted every single recession but one in the last 60 years. So that's why it's such a big focus for investors. But to judge the probability of recession, we have to look at other measures as well. And if you look at the gap between the 3-month to 10-year yield,
which the Fed looks at.
Exactly. And actually Powell's preferred measure, the 3-month to 18 months, those are far from inverted. In fact, they have been steepening here in recent weeks.
Tatiana, while we all have been watching the volatility in the bond market, I'm watching volatility in the commodity complex as well. Oil down hard yesterday, was up earlier. Now WTI is back to flat on the day. How do you make sense of the moves that we're seeing?
Well, Kailey, the roller coaster in oil continues, and I have to mention this volatility and the moves are exacerbated by the fact that there's such thin liquidity in the oil market, and that's caused by surging volatility, which is forcing buyers due to the high cost of trading, due to the high cost of hedging. But for oil specifically yesterday, the focus was on China and the lockdowns there in Shanghai, obviously potentially taking away a big source of demand. But I think the consensus here from sell-side research is that we're heading toward tighter markets because the disruption for Russia is yet to play out, and OPEC seems unwilling to loosen their taps. But of course, it remains to be seen at their meeting on Thursday.
All right, Tatiana Dari of Bloomberg Markets Live, thank you so much. That's what's going on in the markets at a macro level. Let's talk about some of the stocks moving on a micro level in pre-market trading here in the U.S. A big one is Ginkgo Biologics. This is a cell engineering firm. It's up about 7% in the early hours trade after reporting earnings after hours yesterday. Beat on revenue. Its forecast for the year also topping expectations, so the stock is reaping a benefit of that. Also moving higher, Tesla for the second day in a row. Of course, this stock was up 8% yesterday on news that the company would like to split its stock yet again. It saw it turn into positive gains for the year with that move yesterday, and those gains continue this morning, up about 3% in pre-market trading. And of course, we also saw Amazon flipping into positive territory for the year yesterday. The question is, will other big tech companies like Apple and Alphabet follow? As of yesterday's close, Apple was down about 1.1% on the year, Alphabet about 2.3%. So when could we potentially, if we do, see those turn into gains? Right now, not too much action in pre-market trading. Apple is up just 0.25%, and it looks like Alphabet not quite trading yet, but certainly two stocks to keep an eye on today, Anna.
A lot to focus on. Coming up on the program, then, we'll return to the theme of travel. An exclusive interview with Tim Clark, president of the Emirates Airline. We'll also talk to Susannah Streeter, Hargreaves Lansdown, senior investment and markets analyst. What does she make of what we're seeing in yield curves? Plus, Russia says U.S. allies are waging their cyber attack on Russia. That is according to the TASS news agency. Allegations on that front continue to fly. We'll discuss this and the history of Russian-linked poisonings with Brett Edwards at the University of Bath, security expert. That's coming up shortly. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Anna Edwards and Danny Berger in London. Matt Miller is off today. Well, a recovery in global travel is bringing airlines back from the brink. Restrictions are being eased across the world, but some parts, such as Asia, are still lagging. Joining us now from the World Government Summit in Dubai is Tim Clark, president of the Emirates Airline. Tim, great to speak to you today, and we'll get to the recovery in travel and the pandemic in just a moment. But I want to begin with Russia, because Emirates is still flying there as the UAE does not have an airspace ban. I'm wondering what traffic looks like. Are the planes as full going into Russia as they are coming out?
Well, you're right. We are still flying to Russia. We do a couple of flights a day to Moscow and one to St. Petersburg. The loads are fairly healthy, as are the cargo operation as well. And the nature of the mix of passengers is people traveling for humanitarian reasons, NGOs, diplomatic corps, etc., plus some tourists. But yeah, we continue to fly.
And obviously, one of the consequences of the conflict between Russia and Ukraine has been a roiling of the commodities complex and higher oil prices. How are you at Emirates dealing with that?
Well, I think we were facing higher oil prices prior to the conflict in Ukraine, and we're dealing with those as we've done in all the years that we've been facing volatility in the oil markets. Unfortunately, that means that the prices have to rise to cover the fuel cost increases, but the airline is profitable now, it's cash positive, and we will make any adjustments to our fares and our pricing points just as the fuel declines or even goes up. So we're managing quite well.
Tim, good morning. It's Anna in London. As Kailey mentioned there, you are still flying to Russia, and as you've said yourself, you are. I think you said this morning that your owner, the Emirates owner, hasn't directed the airline to stop flying to Russia. Now, some businesses are deciding to kind of self-sanction, so to cease trading or to not explore new trading in Russia, even if they are not formally restricted from going there. Have you been giving any thought to that at Emirates?
Well, Anna, it's as the airline manager for this business, I will take my direction from the ownership, which happens to be the government of Dubai. And until such time as the government of Dubai tells us not to fly to Russia, we will continue to do so. It's as simple as that. But I stress the point. The point I made earlier today was that these sanctions are not aimed at the Russian people. The Russian people are equally affected by what's been going on in Ukraine and everybody else, I suspect. And therefore, they are wishing to travel. But importantly, there are groups of people outside Russia who have dealt with Russia, who rely on Russia, who still need to travel to Russia, and their goods need to travel into Russia. So all we're doing is being an enabler, a facilitator, if you like. I'm not taking any position on that. That is for the state to decide what we do. But at the moment, that is what we are doing.
Okay, so taking direction from the Emirates owner. Let me ask you about flight paths. We've heard from some airlines about the way they're having to adjust flight paths to fly around conflict zones and indeed in some cases to avoid Russian airspace. What are you doing at Emirates and how much is this adding to the cost base?
Well, to the first point you asked, that we always avoid conflict zones and always have done. So that's a safety of operation issue. As far as our overflights on Russia, because we are still flying and we have not been told not to, as I said earlier, we continue to overfly Russia to many of the American points, particularly on the West Coast.
Tim, you also announced Friday that you're resuming some pre-pandemic flight frequencies to India starting April 1st. Are there any other regions you're looking at considering that you haven't already getting back to pre-pandemic levels of air flight?
Look, demand is such at the moment, and I think you probably rightly identified the fact that we are facing this bow wave of demand that we talked about last year. That is manifesting itself in a very, very robust manner. We're facing requests for our flights from all over the world. Now, there are some trouble spots. China remains difficult to get access to, but all the other countries now are opening. So as we open, we are constrained not so much by country restrictions, but by our own ability to get our pilots and cabin crew onto the aircraft and train to the high standard that we set ourselves. So this is more driven by that.
Well, if I can jump in to that point, in general, what does Asia travel look like as you have some regions opening up, but as you say, China is still very restrictive?
Well, Asia remains very, very strong. It always has been. And if you shut countries down or large continents down for 2 years, you're bound to have to deal with the resurgence of demand on the likes that we're seeing at the moment. So with the exception of China, because there are restrictions going in and out, the Thai, Korean, Japanese, Malaysian, well, you name it, Vietnam markets, Indonesian, are very strong. And the more we put in, the more we get out of it. So their flights are full. The cargo holds are completely full, as you know, because of the supply chain disruptions across the global economy. And people want to travel, and they are traveling, and we'll do our level best to get them on board our aeroplanes.
All right, Tim Clark, president of the Emirates Airline, thank you so much for joining us for that exclusive interview. Now, keeping you up to date with news from around the world, here's the first word. In Shanghai, authorities cranked up lockdown restrictions for people living in the eastern half of the city. They'll be allowed outside only to get a COVID test. After 4 days, the other half of Shanghai will be locked down. The city recorded a record number of almost 4,500 COVID cases today. And Bloomberg has learned that police in London will issue at least 20 fines to government officials close to Prime Minister Boris Johnson who broke lockdown rules. Johnson's junior staff is expected to be targeted in the first round. The police have been investigating a dozen gatherings on government premises, including the Prime Minister's apartment. So the Partygate saga, Anna, it continues.
Yeah, returning to the Partygate saga, we'll see where these fines land and indeed wait for other rounds of that news story. Now, coming up, Susannah Streeter joins us, Hargreaves Lansdown, Senior Investment and Markets Analyst. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. Ukraine wants a ceasefire agreement in talks with Russia that begin today in Turkey. Foreign Minister Dmytro Kuleba also set a minimum goal of an improvement in the humanitarian situation. At the same time, NATO allies appear split over whether they should talk to Russia's Vladimir Putin. President Biden has renewed his effort to squeeze more tax revenue from the largest corporations and wealthiest households. His new budget calls for $2.5 trillion in tax hikes. It includes a modified wealth tax and eliminates the carried interest tax break for investment funds. And will investor confidence be shaken by that bond sell-off and inverting yield curves? Stocks continue to gain. Oil is fluctuating today after the biggest loss in almost 3 weeks. I'm Anna Edwards with Danny Berger here in London. Kailey Leinz with us in New York, of course. Matt Miller is off today. Kailey, what's caught your eye ahead of the US Open?
Well, I continue to watch the bond market, Anna. That really is where the action is as curves continue to flatten and equities continue largely to withstand it. Right now, S&P 500 futures are in positive territory by about 0.4%, so right around session highs, even though it's not a massive move. But where the massive moves have been is in that bond market. We are continuing to see yields moving higher, but more so at the front end of the curve. 2-year treasuries really leading the charge, and that is leading to a flatter yield curve. Right now, the spread between 2s and 10s sitting at 7.3 basis points. Will that curve ultimately invert, and what will that signal about a potential U.S. recession? Of course, we've seen a lot of volatility in the commodity complex as well. Oil down 7% yesterday. It was positive earlier today, back in negative territory now, down 0.4% on WTI. $105 a barrel is the handle we're looking at. And finally, a little bit of softness for Bitcoin as well. Near 48,000 yesterday. Today, though, around $47,600. Now, as for some stocks moving in pre-market trading, I wanted to point to Tesla. Of course, news of its planned stock split hit yesterday, saw the stock up 8%, flipping into positive territory for the year. It is now up another 3% or so in early hours. Apple is 1.1% away from being in positive territory in 2022, but it is also up 10 days in a row, its longest winning streak since 2010, and it looks set to continue that today, up about 0.3% in early hours. What's interesting is GameStop also is coming off of its longest winning streak since 2010, another 10 days in a row, moving to the upside. Looks like it may snap that today, though. Some of that renewed meme stock mania may be going the other direction. It's down 3%, and another one of the original meme stocks, Anna, AMC, down 4% in early hours.
I was talking to an analyst at Julius Baer earlier who's talking about the bipolar nature of tech stocks, and maybe that's useful to think about when it comes to today's trading in tech. Then, Kailey, this is the European picture right now, up by 1.2%. To your point, Kailey, we continue to see resilience from equity markets in the face of that volatility and sell-off in bond markets. We've also seen volatility, of course, in the oil price. A slightly weaker oil price was giving a lift to Asia earlier, but today, now here in the European session, we see that oil price a little bit firmer, up 0.1% as we move towards that OPEC meeting. Volkswagen in focus, confirming that it is planning an IPO of its Porsche unit by the fourth quarter of this year. And Barclays still in focus, a big block sale going through just a day after they said that they were going to take a big hit for issuing more structured notes than they were allowed to. It was down 10%, though, in the US trading day yesterday. So Europe played a little bit of catch up today on that particular story. Let's just keep an eye on these Russian assets for you as well. And Russian stocks is not a normal market over on the Russian MOEX right now. They have a reduced trading day, even if they are expanding it a little bit, but there's no short selling allowed. That index up by 2.2%. The Russian ruble continues to bounce against the US dollar, up for 7 days now. We'll watch that demand from Putin, from the Kremlin, around how he wants to receive payment for Russian assets, for Russian energy. And there's been a lot of refusal on that front from European leaders. Also keep an eye on the 10-year bond yield, or keep an eye on fixed income generally. Interesting to note that we have had confirmation from Russia that they have paid one of the coupons around a 2035 euro bond. So that story still with us then, Danny.
And no shortage of volatility and confounding market moves. Let's try to solve the mystery of some of them. Joining us now is Susannah Streeter, Senior Investment and Market Analyst at Hargreaves Lansdown. Susannah, thanks so much for joining us. So we have a 530s that's inverted. You also have a 210s yield curve just around 7 basis points. How do you interpret these yield curves and their usefulness for predicting recession?
Well, obviously, they have been a historic indicator, haven't they? But certainly with facing so much volatility, so many kind of conflicting signs. Right now, I think what we're seeing as far as the movement towards these inverted yield curves is this nervousness that, of course, the rapid rise in rates, which is expected to be laid out by the Federal Reserve, could tip the US economy into a downturn. And those fears still are really hanging around. But on the other hand, I think stocks are staying reasonably resilient. I think partly that's due to bargain hunting going on, some of that, but also there is a keen eye on the oil price because, of course, part of the driver for inflation has been the oil price, and it's been dipping back downwards. So Brent crude around $109 a barrel, way off that spike up to $139 a barrel. So I think that's actually easing some of the concerns because, of course, these really higher crude prices are filtering right through the supply chain and causing even more of a headache for many companies. So I think that's partly to do with what we're seeing today.
Thinking about this yield curve, what kind of analysis do we need to give, Susannah, to the 2s, 10s and the lead time between when we see inversion and any recession taking place? I've been looking at a chart that sets out, where we've seen in periods of history a move into inverted territory, and then just how long it takes to get to a recession. And it's not immediate, is it? I mean, there's still room for plenty to happen, I suppose, to change that link.
Absolutely. And I think as well, the expectation, even before we had these indicators from the yield curve, is, of course, because the US economy has been pretty buoyant coming out of the pandemic. We've got stronger consumer confidence, the labour markets looking pretty strong as well, that actually it will withstand a certain amount of hit. So certainly we're not expecting. Yes.
To that point, stronger consumer confidence, it's actually been deteriorating as of late due to higher inflation expectations, and consumers are starting to draw down their savings. At what point do you start to worry about the pricing power of companies, their ability to pass those costs on if consumers are getting less tolerant of higher prices?
Yes, we have seen that start to show through in those indexes of consumer confidence, both in the United States, but also here in the United Kingdom as well. But that really has been over the past few weeks, accelerated over the past few weeks with the commodity chaos that has been unleashed by Ukraine. And obviously consumers are really worried about what is to come. And yes, what has been supporting this consumer confidence is those pile up of lockdown savings, which are being eaten through. And I think what we're going to see is towards the second half of the year, more towards the autumn, that's when more of these higher energy bills are going to hit, and actually people will not have as many lockdown savings to fall back on. Those people, of course, who were lucky enough to build them up, because remember, there are millions of people who are not in that situation. They are living, very much from hand to mouth right now, which is why you've seen some of the companies much more focused on the kind of value end of the market, the budget end of the market, already a weakness there, because there are concerns about actually whether there will be that disposable income for those millions of people, those low earners, that will disappear, and actually that will mean that sales will be dented. So I think that's where you're seeing the most weakness. Of course, as far as the luxury brands are concerned, they are a lot more resilient because wealthier people can withstand these rising costs.
Susannah, thanks so much. Thanks for joining us. Susannah Streeter of Hargreaves Lansdown. Good to get you on the programme today. Thank you for joining us. Coming up on the programme, a suspected poisoning of Roman Abramovich. We'll discuss what really might have happened at the peace talks in Kiev with Brett Edwards of the University of Bath, and the TASS news agency reporting that Abramovich is attending these peace talks in Turkey as well. We'll get perspective on his role in all of this. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an exclusive interview with Uber CEO Dara Khosrowshahi. That's at 2:30 p.m. in New York, 7:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Danny Berger in London. Matt Miller is off today. Kailey Leinz with us, of course, in New York. Let us just get to a few lines that have been breaking this hour around what's going on in Russia. In fact, we'll come back to those in just a moment. I want to take our conversation to Brett Edwards, lecturer in security and public policy at the University of Bath, who can help us understand exactly what's been going on with Roman Abramovich and with the latest in these talks. Good to have you with us, Brett. Can you shed any light on what has or has not happened to Abramovich? Such strange detail emerging around this this possible poisoning. Some US officials in various media reports suggesting maybe it wasn't poisoning, maybe there were environmental factors to be aware of. Very difficult to get any confirmation of that. And why did it take so long for these events to come to light? Can you shed any light on that?
Hello, thanks for having me on. Well, yes, so this all stems from a story that broke in the Wall Street Journal yesterday and involved collaboration with open source investigators Bellingcat. So the specific claims aren't that specific at the moment. So we have the accusation that Abramovich and two senior Ukrainian negotiators experienced symptoms of poisoning, and this was followed up by them being examined by medical professionals and toxicologists. However, we're not entirely sure the details of that examination or how quickly it happened after the exposure. And so we're kind of in the dark about what actually happened at the moment. But it's certainly the sort of claim that attracts a lot of attention, particularly considering the amount of disinformation around chemical and biological weapons we've seen during the conflict in Ukraine so far.
And we'll come to that shortly and to your expertise in that. I just want to get to a few lines dropping from the Kremlin. A Kremlin spokesman, Peskov, speaking to reporters on a conference call, saying that President Putin is going to speak by phone with Macron on Tuesday. This in the context of our reporting that says NATO not all on the same page about whether they should engage with President Putin. The Kremlin reiterating Europe must pay in rubles for gas supplies, and also saying that Abramovich isn't an official member of the Russia talks team. And I wanted to ask you about that, Brett, because we heard from the TASS news agency earlier on that he is in Istanbul at the same time as these talks are taking place. I wonder what we know about his role in all of this.
Well, I don't know. And I mean, in the UK, Abramovich hit the headlines because it was associated with the Chelsea Football Club. And so for many in the UK, the fact he was at negotiations, I think, will come as a bit of a surprise. So I'm not exactly sure what the specific involvement he has in those negotiations are.
Brett, I want to get back to your expertise on biological warfare, on poisons. Now, as you were saying, there's a lot of uncertainty of what specifically happened with Abramovich. But what do we know about this war in Ukraine so far and the use of things like poisons and chemical warfare?
Sure. So we have seen around 10 different lines of discussion in relation to chemical and biological weapons and warfare in this conflict. The vast majority of them are spurious. So the most significant claim we saw the other week was Russia claiming, well, it made several claims, but one of the claims was that the Ukrainians were weaponizing birds. And this is basically almost a party piece at this point. Russia doesn't like the US's sphere of influence in certain labs in Ukraine. And so basically it made up some stories. It did the same thing in Georgia about a decade ago, and nothing came of that either. And then in addition to that, we have perhaps some much more sincere concerns about the potential that chemical weapons may become involved in this conflict. And so we've seen discussion, for example, of whether or not Russia has chemical weapons, whether it would use them. We've seen discussion of what, in my view, is perhaps a more serious concern or more likely concern, the idea that industrial facilities which contain chemicals, which might be poisonous, might be targeted or damaged as part of this, or else utilised as some sort of false flag attack. And in addition to that, we've seen lots of other discussion, which a lot of it sits in this kind of broader geostrategic disinformation environment. So I'm not entirely sure how much stock I put in many of the claims.
Right. Well, that's what the U.S. has called the absurd propaganda, that Ukraine has biological weapons, that it has labs there. Again, all of this attributed to disinformation by Russia. Brett, part of the concern has been that that will be used as a pretext to use bioweapons. Do you think there's any credence to that argument?
Not. My gut says no. I think Russia its disinformation and propaganda strategies are kind of well established now. They're in the groove. So they have common disinformation stories they use, and they also have this kind of scattergun approach to disinformation. So my reading of it is that most of the disinformation we've seen, particularly in relation to the kind of extension of much more long-standing general disinformation strategies, I don't see it as having any relationship to a kind of false flag or them preparing to use such weapons. What
Brett,
we will...
Brett,
Sorry,
if I could just interject, what lessons can we learn from Syria and that playbook and how it may play out in this conflict?
Sure. I mean, that was a very different context, primarily because we knew that Syria had chemical weapons and we knew that they were employing them. In this context, there's no evidence that chemical weapons, as in kind of state-developed chemical weapons, neither of those states, we think, would possess them. We don't think Russia would possess at any scale. Obviously, Russia was recently implicated in the assassination attempt of Alexei, but also the Skripals in the UK near me. And so we think they may have some sort of small production capability, but nothing like the kind of large-scale or battlefield use, which comes to mind, for example, you're thinking about Ghouta back in 2013.
Brett, thank you so much for joining us. Brett Edwards, a lecturer in security and public policy at the University of Bath. Thank you for lending us your expertise this morning. Coming up on the programme, an exclusive interview with the World Bank President David Malpass. That's at 8:30 a.m. in New York during Bloomberg Surveillance, 1:30 p.m. in London. This is Bloomberg.
For us, we've been reducing our exposure to Russia, both on the collateral side and on the client side, tremendously already since January, because tensions were looming. We've seen the precedent with Crimea and the invasion there, and we feared that Russia might become an area where we better be cautious. And if you look at our own, on-site in Russia, we have only 70 employees there. We don't do any new business in Russia at all. All we're doing is winding down trades.
That was Axel Weber, the outgoing chairman of UBS, speaking earlier on Bloomberg Television. Joining us now on Bloomberg Television and radio, Tom Keene, co-anchor of Bloomberg Surveillance. Tom, I know you have a great chart because I got a little sneak peek of it yesterday. You're looking at the divergence between the UK and Japan.
This is one of the most important charts out there. This is normalized Japan animal spirit, and I took another island nation, the United Kingdom, is somewhat of a compare and contrast. And the bottom line is, out of 1994, a long time ago, Japan is a zombie economy. This is, Kailey, at the absolute heart of the debate over yen, heating up overnight with some chit-chat of intervention and tones of intervention by Japanese authorities. But it's just amazing how Britain boomed, Britain went flat in 2007, and Britain has clawed back, and Japan has not.
Yeah, a lot of conversations about what the weakness in the yen will do to the Japanese currency. They're watching that closely in Japan, of course. Tom, I know you're looking out for an interesting conversation you're set to have later. World Bank President David Malpass will be joining you. I know we heard from the chief economist at the World Bank not long ago, talking about how contagion has been such a feature of their work when it comes to emerging markets, and that, no doubt, a focus of what you'll be discussing.
Yeah, on the financial side, which Mr. Malpass is truly expert at, there can be some contagion. And I would not dismiss yen dynamics within the EM, particularly and of the Pacific Rim. But far more with Mr. Malpass, it'll be about their efforts on humanitarian aid to Ukraine. We've obviously reached a critical point in the attrition war over there.
All right, really looking forward to that conversation. And thank you for this conversation, Tom Keene, co-anchor of Bloomberg Surveillance. Now let's take a look at what else we're watching today. I am watching the moves in Bitcoin. We've talked a lot about the stealth rally Bitcoin has gone underway. Will we see, however, a meaningful breakout of the range that it has been in really for the entire year? Bitcoin is giving back a little bit of its gains from yesterday, right now trading around the 47,600 level. But of course, we're going to be talking a lot more about that later on today. Shameless plug, Bloomberg Crypto, 1 p.m. Eastern time here on Bloomberg, Danny, so you don't want to miss that.
Always be plugging, Kailey. Well, I today am watching the yield curve. Front end of the yield curve has been off like a rocket, up another 10 basis points this morning for a total of 30 basis point move over the past 3 days. Now, this does mean we continue to see a flattening of the 2s, 10s, one of the few yield curves left to flatten and invert, as we've seen others. 2s, 10s now at 7 basis points. What does this mean for recession? Sure, the Fed's not even looking at this one, but of course, historically, Anna, it's been a good predictor. If anything, it does mean that the Fed is going to be raising rates in the short term and will be forced to pull back or cut sooner down the road.
Right, yeah, really interesting to think about the UK example in that, if I can not be too parochial about it, but interesting that we were talking about such big hikes here in the UK. We're still talking about a hiking cycle, but then we're also thinking about cutting rates within the next 2 years. So we'll see how quickly the narrative develops in the United States as well. I'm watching the new round of talks taking place between Russia and Ukraine. Of course, these talks taking place over in Turkey. We've addressed this a few times during our program. They're taking place in Istanbul. The foreign minister of Ukraine says the minimum criteria is an improvement in the humanitarian situation, and nobody can be unmoved by the images you see coming through of Mariupol. The mayor there saying more than 5,000 people are dead in the siege of Mariupol, but of course those figures very difficult to confirm. So Ukraine wanting some sort of ceasefire agreement. What is Turkey's role in all of this? We've heard from President Erdogan already saying that he expects good news and also saying that the time has come to get concrete results. There is a complex military relationship between Turkey and Ukraine and between Turkey and Russia. So all of that very much in focus. But Danny, from a market's perspective, it is the yield curve that catches our attention and the resilience of stocks.
It is. And look, all of this is connected as the war continues to create supply chain pressures. I know Kailey has been looking at this today, the volatility in oil. Kailey, at one point, oil was tumbling this morning. It gave Asia stocks a little bit of a reprieve, but we're looking at Brent higher by 0.4% and WTI higher too. The volatility continues in this asset, Kailey.
Yeah, absolutely. It seems to be moving to very large degrees each and every day, but how much of that can we just chalk up to a lack of liquidity in this market versus all of the headlines and the fundamental story, Anna?
Yeah, we heard from OPEC. We heard from the Saudi energy minister, in fact, saying, trust us, we're balancing this market. We know what we're doing. This is what we do. We'll see how that develops. More Bloomberg surveillance is ahead, including an exclusive interview with the World Bank president, David Malpass. This is Bloomberg.